Hello, welcome to the weekly technical analysis review for Wednesday, March the 4th. I'm Rafi Barajan at xm.com, and this week we're going to be looking at the US500 stock index, EURUSD and Euro Pound. So starting first with the US500 stock index cash, we can see looking at the momentum indicators that they are all pointing outwards. Stochastics have the percentage K line at least has entered the 50 neutral area. The RSI, although it's still way in bearish territory, it is clearly pointing outwards, and we can see that through the price action we did see a strong rebound of the 50% Fibonacci retracement of the up leg from 2,332 to 3,396. So that was around 2,864. In fact, specifically that level comes in at 2,854. At the moment, prices are hovering around the 200-day moving average, so that is proving to be a sticky resistance area. Yesterday we did see prices briefly spike towards the 23.6% Fibonacci at 3,145. So basically the index does need to break above that level in order to gain further upside momentum and enter the Ichimoku cloud, which would help ease the downside pressure, and it would also take it closer to the 50 and 20-day moving averages around the 3,255 area. Clearing those hurdles could see the US 500 index make another attempt towards its all-time high just below the 3,400 level, and that would restore the bullish picture in the medium to long term. For now, though, prices do need to make a clear break about 23.6% Fibonacci in order to maintain that positive momentum. Otherwise, we could see the index heading back down again, and the immediate support is at the moment at the 38.2% Fibonacci at 2,990. Below that, could see the index heading back towards that February low of 2,854 before heading towards the 61.8% Fibonacci at 2,738, which, if broken, could signal that the latest downside correction is more than just a temporary one, and we could the index could be entering a bearish phase in the more medium term. Let's now turn to euro dollar. It is looking somewhat overbought at the moment. The stochastics are in overbought territory above 80, though we can see the improved picture clearly in the MACD. The histogram has turned positive for the first time since January. At the moment, though, there is strong resistance coming from the 61.8% Fibonacci retracement of the downleg from 1.1411 to 1.0777, so that's around 1.1170. A break above that level could then see further hurdles at the December peak of 1.1238, followed by the 78.6% Fibonacci at 1.1275. If those hurdles are cleared, the euro dollar would be on a more sustained path outwards, and then it might be able to make another attempt at the 1.14 handle, which it last tested back in June of last year. For now, though, prices are drifting downwards, and there is immediate support at the 200-day moving average at the 50% Fibonacci at 1.1094. If that is broken, we could see euro dollar losing further momentum, and it could soon be testing the 50-day moving average around 1.1020. And then if those supports fail to hold as well, we could see the 20-day moving average coming into focus at around 1.0927, and then below that we could see the euro dollar testing the 3-year low 1.0777, which it touched earlier in February. And finally for today, looking at the euro again, this time against the pound. Again, a strong resistance at the 200-day moving average, so that's at the moment capping prices around 0.8742. If that resistance holds, we could soon see the 123.6% Fibonacci extension of the January to February downtrend around 0.8669. coming into range. If that's broken, we've got the swing high from January at 0.8595, but the key supports to the downside are really the 50 and 61.8% Fibonacci levels of 0.8438 and 0.8475 respectively, because if those support areas, if that support area doesn't hold up, we could see Euro Pound making another attempt at that 3-year low of 0.8276. For now, though, although intraday momentum is to the downside, the overall short-term picture is still fairly positive. The RSI is holding around 70. The MACD has strongly we can see it's strongly turned positive. So Euro Pound might be able to make another, clear the 200-day moving average and then aim for the 0.89 handle near the 200% Fibonacci extension, which it needs to do in order to give us a more convincing picture that the current uptrend is sustainable. So that's it from me. Thank you very much for watching. Have a great day.